everyone, John right here, slingshotfutures.com. Welcome to the daily market outlook for the futures markets. Hopefully you brought your caffeine in today. It was a very slow day with some kind of breakout moves when Yellen hit the microphone and then it just went back to sleep again. So a very oddball, kind of funky day overall in the world of trading. Now before we jump at all the charts, as always, swing on over to slingshotfutures.com, scroll down, click on the Join the Daily Outlook newsletter. You'll be notified every time we launch one of these videos. It'll get sent straight to your inbox, as well as any new information or any cool things going on at that time. Along with that, make sure to check out in the morning at the bottom of the page the latest blog post. Every single morning, we post the live trade room morning prep levels for our level traders who are able to kind of keep an eye on these levels and trade off of them with some pretty scary accuracy sometimes. So jumping in, first of all, the Bund. The Bund did have a nice downtrend working its way lower, and it was a pretty solid move, right? It was a little bit more consistent, nice downward swings, and then when we started moving into the US session, going in with Yellen speaking as well, things got a little bit crazy, right? We had a big push at the end, and then just bad follow through. They found their way through a new low. They couldn't even close underneath that low. When they came back to retest it, found immediate failure, and now we've been grinding back higher. Now this, in all rights and regards, may just be one big flag for the market to now break down and continue lower, and we do have major objective targets below us at 163.11. So the sellers do have an opportunity to try to drive the market further down and meet that major objective down there. Now, there are a couple different areas of interest here. We do have this bull channel rising higher, and we are finally finding a bottom with a top. And the top did miss that test. So this may just be a grind and then a break and a breakdown. If we can get this move to continue higher, I would like to find resistance back where we found a bunch of support. You can see they kind of went back and forth inside here. It was also a test here. If we go back to the prior day, there, inside here, lots of support and resistance in this area between 163.64 up to 71. So I would love to see the market push up into that area, find resistance, and then potentially break down once again. Over on gold. Now gold, again, lots of volatility, but something very interesting is happening here on gold. We started off the morning with a nice, well, I won't say nice, it wasn't that great, but a decent bull trend working its way higher, correction in the overnight session, and then a move back up towards the highs. Put in a wedge top, and then failed, right? Now, generally speaking, that would be seen as more of a pennant. You get a move up, puts in a pennant, and then continues. It's very high probability that it continues up, and it failed. Then we go down to the lows and we do the exact same thing. We put in a pennant down here, or a wedge, or a triangle, or whatever you want to call it, and then we failed that one too. So we're getting really bad continuation, and every single time one of these big moves happens, it's after a wedge fails. That's just kind of the way that it's been working right now. Now at this point in time, we are putting in a high and we're trying to put in a low. If we start seeing some form of a wedge, we may be in store for an interesting little breakout here to the downside. Because if we put in a wedge here, you would anticipate it to break higher, right? But every single one of them has failed so far. So chances are, if it doesn't go through the highs and stick, and you can get a move back down, you may find one big old move right back down to the lows again. All of the moves that we saw today were sparked off by a wedge in conjunction with obviously news. So it'll be very interesting to see if they can keep that kind of pattern repetition going on. At the moment, in the big scheme of things, we're really just kind of in a range. We made a new high, made a new low, made a new high, made a new low, and we're just kind of in the middle. Because we're in the middle, we did put in a big failure up here. It's the same place that we found resistance earlier, and when we broke above it, we found support at the top edge. And then when we came back, all in one candle, one big old candle, found that bracket high and low all in the same place and put in a massive wick there too. So that area is a definite concern between 1231 and 32.9, pretty wide area to have to deal with. If we can break higher, you're looking for resistance around 35.5 to 36, and if it does end up getting that failure and dropping back down to the lows, you're looking for 23.3 to 22.7. So again, range, we're in the middle of it, looking to buy low, looking to sell high, and try to stay out of the middle. And if we can get a wedge formation, especially one that fails, we may have some pretty interesting movement on our hands. Over on the bonds had a big drop off of the highs. We were very sideways. We were talking about yesterday how the bonds were just, the range was abysmal. We had barely any move. In the US session, it wasn't even a point. It was like 18 ticks. In the extended hours session, it wasn't even a point either. It was 28. So very weak movement yesterday. Again, coiling that spring up. And when they finally let that spring go, man alive, did that thing bounce. So big move to the downside, and that leaves open objectives down for a retest ahead of the lows at 150.03 or so, 03 or 04, down in that location for one more major objective push lower. Now, we do have a bull correction going on, and it is getting slightly steeper. You can see how the lows are sort of lifting a little bit, but that is breaking the wider channel. We broke above it, and generally that's seen as unsustainable movement. We still haven't even come close to getting back up into this earlier area of support turned resistance, assumed at some point. So the fact that we're putting in such a massive amount of just kind of resistance here, in the failure that they can't even get back up, not even to test that 151 area, very interesting pattern formation going on here. So we have a little bit of extension to the upside, putting in a huge amount of inventory, failing ahead of that big area of support, and looking for that 150.22 up to 150.27, 28 or so to find that area of resistance up here to then push the market back down and finish that major objective off to 03 or 04. Over on crude oil had a pretty interesting day overall. You know, in terms of the movement, mostly range bound with a slight bullish trend. Now, unfortunately, it's the attack of the wedges again. We haven't really gotten many other patterns today. There weren't a ton of channels or anything like that, but there were a lot of wedges. And with this wedge going on, we see that big run higher. They pause, trap the lows, ram higher, and then get a big old pullback, trap the lows again, and now this time they've failed to continue up. Now, you can see that failure was pretty spectacular, right? Big failure off of the highs with a huge bear candle, and that was in the same area that we saw major resistance, major support, major resistance, all in the exact same place. So if we can get the market to come back into that area between 53.35 and 42, I would love to find some selling pressure there to attempt to drop the market lower. Now, I do have the low of this move marked up down at 53.06 to 53.01. If there's enough bullish strength there to stop this drive lower, there's obviously something of interest there. So if we can get down to those lows again, it would be interesting to see what happens. Blind buying an area like that, not a good plan. But if you can get a move down, you see support come in, then you may have something on your hands for a run back up towards the highs. If they break through that, then you use it as resistance and look for the opposite end, and then you're gunning for the low a day. So right now we're just kind of in between the two rocks. We're kind of stuck between a rock and a hard place here. So we're looking and waiting for a little bit of a correction up or down, and then looking to fade either side. Over on the NASDAQ, in a very similar picture on the S&P as well. Very bullish move towards the end of the day. After we opened up and after Yellen got off the microphone, we hit 11 o'clock and it just didn't stop going higher. Very bullish momentum to the upside. But if we look before that, we really didn't have a whole lot going on. Very nasty price action before that 10 o'clock or so hour. And arguably even after that, until we started getting higher into the lunchtime session. So this back and forth that we saw, we have to assume that even though this looks like a ridiculously strong move up, well, in context, you know, we're still kind of stuck, right? We have a lot of range sentiment. If we zoom way out, we can obviously see, yeah, you need to be a buyer, right? That's pretty common sense if you've had a TV turned on at all this week. But that all said, you know, it is assumed that we may start seeing some deeper pullbacks. This big move up after seeing a massive range, a lot of this was fundamentally driven, which means that the spring's already bounced, right? We've already had the big move. Now it's time for the market to go a little bit more sideways and consolidate again going into tomorrow. Now, hopefully it does like this and gets it out of its system in the overnight so we don't have to deal with it for tomorrow's US session. But all of that said, we are potentially going to be transitioning into a range sooner than later now. The high and low could be something like this, and this is just a fake out to the highs, or it could be a really wide one that hasn't put in a top yet. Either way, the buyers are still in control, so you do need to be on the buy side, especially if you zoom out. That was pretty obvious. But have it in the back of your mind that, you know what? Although we are really strong to the upside, we may start transitioning into a range sooner than you might want it to. Now, the same can be said for the S&P. Big rally to the upside, but the overnight session completely dead. Now, this is another one. Again, zoom out. It's pretty obvious which way we're going. You're looking to become a buyer, right? You want to buy for pretty much any reason. And the nice thing is about this, and the same goes for the NASDAQ, is that the overnight session was kind of that range pullback area, right? Got that big rally to the upside, flags out a little bit, tries to break down, breaking down a bear channel, not very sustainable, and rockets to the upside. But then we start putting it into perspective, and this is a huge move at the end of a very strong trend that's been going on for a very long time. Now, a trend that's been going on this long with this big of a burst at the end, much more likely to be exhausted than it is going to be new strength. New buyers coming into the market, not as likely on this pop higher. So again, in the back of my mind, I'm always thinking here in this type of scenario, yeah, I mean, it looks good and I need to be a buyer on given opportunities, but we might just transition into a range here as well. Very strong run higher over the most recent moves, so it's still assuming that buyers are in control. Again, don't lose sight of that, but just keep it in the back of your mind. Range might be around the corner. So that's going to do it for this one. As always, like we always say, make that plan, trade the plan, follow those rules, and you will be A-okay. Until tomorrow, have a good one.